An explosive new study out today sending shockwaves throughout the crypto universe. New evidence alleging market manipulation in the price of Bitcoin on its way to the record high back in December. Our Bob Pisani joins us at the NYSE with more on the story. Bob.
Quite explosive, Melissa. Is the price of Bitcoin really being manipulated? A paper by finance professor John Griffin and Amin Shams, a graduate student at the University of Texas, says that manipulation may have accounted for at least half of the increase in the price of Bitcoin and other cryptos in the last year. Now, Griffin and Shams looked at activity at Bitfinex. This is one of the largest exchanges, noting that the flow in and out of that exchange showed patterns that indicated that prices were being pushed up at times when they were sagging at other exchanges. Now, they say this was accomplished using Tether, which is a digital currency pegged to the U.S. dollar. The paper concludes that purchases of Bitcoin using Tether were timed following market downturns and resulted in sizable increases in Bitcoin prices. They say that less than 1% of the hours where there was heavy Tether transactions tied to accounted for half of Bitcoin's meteoric rise and more than half of other top cryptocurrencies. Now, they concluded that they found, quote, and I'm quoting them, substantial support for the view that price manipulation may be behind substantial distortive effects in cryptocurrencies. All right, what should be done about this? The author suggests that market surveillance within a proper regulatory framework may be needed for crypto markets to be legitimate stores of value and a reliable medium for fair financial transactions. You know, Tether was created and sold by the owners of Bitfinex. Now, when asked for comment, Bitfinex CEO J.L. Vandervelde told CNBC, quote, Bitfinex nor Tether is nor has ever engaged in any sort of price or market manipulation. Tether issuances cannot be used to prop up the price of Bitcoin or any other coin token on Bitfinex. Now, this isn't the first time Griffin has made market manipulation claims. He wrote a paper in 2016 alleging financial contracts tied to the VIX were also potentially being manipulated. Back to you, Melissa.
All right. Thank you very much, Bob Pisani. Let's bring in the co-author of that study, Amin Shams, the researcher at the University of Texas, Austin. Amin, great to have you with us.
Excited to be here. Thank you.
We've got the report here. If you were called in front of regulators, what would you say to them?
I would say that so any investor, I mean, the first thing investors need from a market is to trust it. And the first thing a market needs to grow naturally is integrity. So we find evidences that the rise in Bitcoin and other cryptocurrency prices during the boom of 2017 may not be all driven by demand-based stories.
When you take a look at the charts of all the coins, for that matter, Amin, you know, in the run-up and then the following crash, they are all highly correlated. Did you find any other sort of possible manipulation when it comes to other coins using Tether?
So, of course, cryptocurrency prices are very correlated, and it's very hard to distinguish between different cryptocurrencies. But we look at the cross-section of some major large cryptocurrencies, and we show that price of all of those cryptocurrencies was affected.
There's so many reports, Amin, about the so-called Bitcoin whales out there, and I'm wondering if that's an area that where you think they either could have played a role in this Tether-related manipulation of Bitcoin prices, or if perhaps they were in cahoots with the guys who were manipulating Tether and then therefore Bitcoin.
It could be, but we didn't specifically focus on that. So this is a market that's supposed to attract supposed to be decentralized, but we see that prices could be hugely affected by these big players in the market that kind of questions the philosophy of the market.
All right, Amin, we're going to leave it there. Thank you so much for your time. It's a fascinating study. Amin Shams of the University of Texas, and it's a big study. And this certainly, I mean, the bottom line here is the fear of increased regulation when it comes to cryptocurrencies. And I think that was sort of the shudder felt by all the investors today.
Yeah, listen, I mean, we say it again and again. I think there's a lot of investors who are in this for the long haul who would like to see some framework. They'd like to see some regulation.
People waiting for regulation?
Yeah, and so it's really interesting when you think about some of this, the talk of manipulation by whales or whatever. When you look at the breakout that you had from November up into the highs, and that was a mania. And whether it was being manipulated or not, or goosed up a little bit, but that was a worldwide mania that took Bitcoin to 20,000 and all these other coins with it. So the fact that we're overshooting on the downside can't be much of a surprise, and there's going to be a lot of bad actors taken out along the way, and I think that should make people feel better about it as we go.
But looking back, I remember during this rush, right, you had prices on different exchanges, very, very big difference in prices. Like, I mean, you look at Coinbase in general, there were so many accounts being opened on Coinbase, they couldn't get enough Bitcoin. Whereas you look at Bittrex, there are people that were arbing that. So you'd buy it on Bittrex, you'd sell it on Coinbase. So I think that whole process maybe skews his data a little bit. So I think in general, the arb, in my opinion, was just closed here. That's all it was. You're looking at prices being very different on different exchanges, and I think that the traders took advantage of that.
But I think when we had on all those people who were bullish of Bitcoin going in November, December, whatever, and they were saying 100,000, 90,000, whatever that forecast is, that makes you think twice about every single forecast that was put out there.
Well, look, I mean, the forecasts are just based upon a view that we believe that blockchain is here for forever, and therefore the vehicles to play it are going higher. I'm not sure these are the horses to ride. I believe blockchain forever, though.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.